What is happening in the markets? The pace is unreal, and if you're not plugged in, you're missing out on the biggest moves. We've got seismic shifts, strategic plays, and investor sentiment swinging like a pendulum. Get ready, because this is your essential update, packed with insights you absolutely cannot afford to miss. We're diving deep into the forces shaping our financial future, and trust us, you'll want to be here for every second. So buckle up, because the Bitcoin Bulletin is going live with the news that matters most. First up, we're talking about a massive potential catalyst for September 2025, involving some very high-profile endorsements and critical Treasury operations that could redefine market timing. Then, we're shifting gears to analyze Bitcoin's current crossroads. Is gold making a comeback, and how does that tie into the broader economic picture? We'll explore how smart investors are positioning themselves against the prevailing trends in a world of mounting uncertainty. Next, we're spotlighting a significant strategic move by Satsuma Technology. They're making some serious Bitcoin acquisitions, and it's getting serious institutional validation, all happening at a fascinating point in the current bull cycle. What does this accumulation mean for the market? And finally, a surprising trend is emerging as Ethereum sees outflows, while investors appear to be shifting towards ETH, even amidst price drops. What's driving this divergence? Stick around for all these critical updates and more. Don't forget to hit that like button, subscribe for your daily dose of market intelligence, and ring that notification bell so you never miss a beat. A high-profile catalyst on the horizon. Prepare for a potential seismic shift in the market landscape, as September 2025 emerges as a pivotal month, potentially driven by a confluence of significant events. At the heart of this anticipation lies the potential involvement of the Trump family, whose endorsements could inject a powerful wave of mainstream attention and validation into the cryptocurrency space. This isn't just about celebrity endorsement. It's about leveraging significant public influence to potentially shape market sentiment and drive adoption. Imagine the ripple effect when a family name synonymous with deal-making and high-stakes business enters the crypto arena with a clear message. This could signal a new era of acceptance and integration, moving digital assets further into the global financial conversation. Complementing this high-profile development is the critical aspect of Treasury refinancing. Governments worldwide, and particularly the United States, regularly engage in refinancing operations to manage national debt and economic stability. When these operations occur, especially on a large scale, they can have profound impacts on liquidity, interest rates, and overall market confidence. The timing of such a significant financial maneuver in close proximity to potential high-profile endorsements creates a unique intersection of political influence and macroeconomic policy. It raises questions about how these events might interact. Could Treasury actions create a more favorable environment for crypto adoption, or could endorsements influence the way these refinancing operations are perceived? This intricate dance between government finance and emerging asset classes presents a complex but potentially rewarding opportunity for those who can anticipate the market's reaction. Furthermore, the strategic timing of these events offers compelling market timing opportunities. Analysts are already scrutinizing how these factors might converge to create favorable entry or exit points for investors. The interplay between potential political endorsements that boost sentiment and fiscal policies that affect liquidity could create volatility and unique trading windows. Understanding the macroeconomic backdrop, the specific mechanisms of Treasury refinancing, and the potential impact of influential endorsements allows for a more nuanced approach to market participation. It's about identifying the confluence of events that could lead to significant price movements and strategic advantages. This period in September 2025 is shaping up to be a critical juncture, demanding close attention from anyone involved in the financial markets. This convergence of political endorsement and fiscal policy is a game changer. But how does this compare to the current battleground where gold is making a strong comeback? Bitcoin at a crossroads, gold's resurgence and contrarian plays. Bitcoin finds itself at a critical juncture, navigating a complex economic landscape increasingly influenced by the resurgence of gold and persistent macroeconomic uncertainty. This period marks a significant test for digital assets, as traditional safe haven assets like gold are experiencing renewed investor interest. The factors driving gold's appeal are multifaceted, ranging from inflation hedging and geopolitical instability to concerns about the stability of fiat currencies. As investors seek refuge from volatility and potential economic downturns, gold's historical performance as a store of value is being reevaluated, potentially drawing capital away from riskier assets, including cryptocurrencies. This dynamic presents a challenge for Bitcoin, often touted as a digital gold. While Bitcoin has demonstrated significant growth and adoption, its volatility remains a key concern for many investors, especially when contrasted with gold's perceived stability. The current macroeconomic environment, characterized by fluctuating inflation rates, shifting interest rate policies, and global economic uncertainties, creates a backdrop where investors are meticulously weighing their options. The strength of gold's performance in this climate forces a re-examination of Bitcoin's role in a diversified portfolio. Is Bitcoin truly a hedge against economic uncertainty, or is its correlation with risk assets still too strong? These are the questions investors are grappling with as they decide where to allocate their capital. In response to this complex environment, a contrarian positioning strategy is emerging as a potentially effective approach. Contrarian investors deliberately go against prevailing market sentiment, buying when others are selling and selling when others are buying. In this context, it could mean betting on Bitcoin's long-term potential despite gold's short-term strength, or perhaps even finding opportunities in assets that are currently out of favor but possess strong underlying fundamentals. It involves a deep understanding of market cycles, economic indicators, and investor psychology. By analyzing the interplay between gold's performance, Bitcoin's technicals, and broader economic trends, contrarian players aim to identify undervalued assets or anticipate market reversals. This strategy requires a high degree of conviction and a willingness to diverge from the crowd, particularly when traditional narratives are being challenged by the reemergence of established assets like gold. Audience impact. This strategic positioning is sparking debate among investors and analysts alike, with many questioning whether Bitcoin can maintain its momentum against the backdrop of gold's enduring appeal and economic headwinds. While Bitcoin navigates these macroeconomic currents, another player is making significant moves, validating its strategy with substantial institutional backing. We're talking about Satsuma Technology's aggressive Bitcoin accumulation. Satsuma's strategic Bitcoin accumulation signals institutional confidence. In a market environment often defined by speculation and rapid shifts, Satsuma Technology has emerged as a noteworthy entity, demonstrating a clear and aggressive strategy of Bitcoin accumulation. This sustained acquisition of Bitcoin by a technology firm is not merely a passive investment. It represents a deliberate positioning within the digital asset landscape, signaling a strong conviction in Bitcoin's long-term value proposition. The sheer volume and consistency of these purchases are turning heads, indicating that the company views Bitcoin as a strategic asset rather than a mere speculative venture. This move is particularly significant given the current stage of the bull cycle, where market participants are increasingly evaluating the sustainability of growth and the potential for future appreciation. This strategic accumulation is further amplified by significant institutional validation. As more established financial players and corporations begin to integrate Bitcoin into their balance sheets or investment strategies, it lends a crucial layer of credibility to the asset class. Satsuma Technology's actions, when viewed through this lens, are not isolated. They are part of a broader trend where institutions are increasingly recognizing Bitcoin's potential as a store of value, an inflation hedge, and a medium for diversification. This institutional embrace often comes with rigorous due diligence, suggesting that the underlying fundamentals of Bitcoin are meeting the demanding criteria of sophisticated investors. The validation from institutions can have a powerful psychological effect on the broader market, encouraging further adoption and potentially stabilizing price action by bringing in more committed, long-term capital. The timing of this aggressive accumulation within what is described as a late bull cycle is particularly intriguing. Typically, in the later stages of a bull market, caution might be expected. However, Satsuma's move suggests a belief that the cycle has further room to run, or that current price levels still represent a favorable entry point despite the preceding run-up. This could be driven by a variety of factors, including a long-term outlook that transcends short-term market fluctuations, a belief in the ongoing technological development and adoption of Bitcoin, or an expectation that upcoming macroeconomic events will further bolster Bitcoin's appeal. The company's strategy implies a sophisticated understanding of market dynamics and a willingness to make bold moves even when the market appears to be reaching maturity. Audience impact. This bold accumulation by Satsuma Technology is being closely watched, with many seeing it as a strong signal of institutional conviction in Bitcoin's future, even as the market navigates a mature bull cycle. While significant players like Satsuma are doubling down on Bitcoin, a surprising shift in investor preference is occurring elsewhere, with capital flowing towards Ethereum despite recent price dips. Ethereum's outflows versus Bitcoin, a divergent investor strategy. A fascinating divergence in investor behavior is currently unfolding in the digital asset space, with notable outflows from Ethereum, ETH, contrasting sharply with apparent inflows or sustained interest in Bitcoin, BTC. Despite recent price drops, a segment of investors appears to be strategically shifting their capital towards ETH, challenging the prevailing market narrative and raising questions about future asset performance. This trend is particularly surprising given that Bitcoin has often been seen as the primary beneficiary of institutional adoption and a safer bet in volatile markets. The movement of capital away from ETH, even in the face of broader market pressures, suggests underlying factors are at play that are influencing investor decisions beyond simple price action. Several potential reasons could be driving this shift. Firstly, the anticipation surrounding Ethereum's ongoing network upgrades, particularly the transition to more scalable and efficient consensus mechanisms, may be creating a longer-term bullish outlook for ETH among certain investors. These upgrades promise to reduce transaction fees and increase the network's throughput, making it more attractive for a wider range of applications, including decentralized finance, DeFi, and non-fungible tokens, NFTs. Even if the immediate price action is negative, the prospect of fundamental improvements can outweigh short-term volatility for forward-looking investors. Secondly, the broader macroeconomic climate, which often impacts risk assets disproportionately, could be leading some investors to reevaluate their portfolio allocations. While both BTC and ETH are subject to these macro pressures, individual asset performance and future potential can lead to divergent capital flows. The narrative of Bitcoin as digital gold and a primary store of value remains strong, but the utility and potential for growth within the Ethereum ecosystem are also compelling. Ethereum's network is the backbone for a vast array of decentralized applications, and its ongoing development could position it for significant long-term gains. Investors might be viewing the current price drops as a temporary setback or even an opportunity to accumulate ETH at a more favorable entry point before the next phase of network development or market recovery. This contrarian view suggests that while Bitcoin might be favored for its established narrative, Ethereum is being chosen for its perceived technological superiority and future utility, even if it means weathering short-term price declines. Audience impact. This trend has ignited considerable discussion within the crypto community, with analysts debating whether this represents a temporary reallocation or a fundamental shift in investor preference towards Ethereum's ecosystem. These are the stories making waves right now, but what does it all add up to for your portfolio? What a ride! We saw potential September 2025 catalysts involving high-profile endorsements and Treasury refinancing, Bitcoin facing a tough choice between gold's resurgence and its own path, Satsuma Technology making bold Bitcoin moves with institutional backing, and a surprising capital shift towards Ethereum despite price drops. That's a wrap on today's essential market updates. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for your daily market intelligence, ring that notification bell so you never miss a critical update, and hit us up in the comments with your thoughts. Follow us on all social platforms for real-time insights. We'll see you tomorrow.